Mindset is what separates long-term successful traders from aspiring wannabes. Anybody can have a profitable year or a profitable 2 or 3 years, but without the right mindset, generally a trader is going to blow up or have a shocking year at some point.
What's up, everyone? Today I'm sitting down with Simon Ree, someone who's able to make trading work full-time in 20 minutes or less a day, roughly. He's someone that I really admire for his hands-off trading, being in the market with a big institutional background, being able to know what the big banks are looking at. And we kind of discussed a few things here about how the banks look at things, what you can learn from these banks and institutions like Goldman Sachs and other big banks, and how you can do trading better. So definitely a good interview here. And let's start with having Simon explain what he's doing these days.
Yeah, I mean, I'm an active trader, but I'm not a day trader. The last thing I want is to be stuck in front of a screen for hours at a time each day. So yeah, the trading I do, I say it's not passive income. It does require effort and hard work, but it's very time efficient. Core of my kind of trading procedure is looking for high probability setups using scans that I've built. And so I run the scans. That takes all of 2 seconds. And then that gives me a short list of high probability trading opportunities. And then it's just a case of weeding out the better opportunities from the ones that don't look so good. Obviously, just because a stock meets certain scan criteria, it doesn't mean it's a trade. Okay, you've got to obviously look at the chart in front of you and trade the chart in front of you rather than just a bunch of technical signals. But it does, again, it makes it very time efficient, because instead of analyzing hundreds of charts every day, I might only be analyzing a handful or a dozen or so.
Awesome. So let's go back in time first. I want you to kind of tell people when you began trading, how it was like when you kind of started trading in the first place.
Yeah, well, I mean, I started in the finance industry in the early 90s. I was in my second last year at high school when the 1987 stock market crash happened. And I just found that whole event fascinating. I didn't have any money invested in the time. I was only, 15, 16 years old. But for some reason, it really captured my attention and my imagination. And I decided there and then I want to do something in the stock market one day. And so I studied economics and finance at uni and made it happen. And eventually was working with Goldman Sachs, where I spent 14 years, spent another 6.5 years with Citibank before retiring from the corporate world to focus on trading full time. But I guess my real formative years in trading was 2008. And that was really when I shifted from becoming an investor, a buy and hold investor, to a trader. I lost a life-changing sum of money in 2008 because I was listening to who I thought were the smartest guys and girls in the room, the equity analysts and strategists at Goldman, who kept pronouncing the market bottom was near and stocks were cheap. And, I bought every single dip that year and left the end of the year feeling pretty battered and bruised. And then it was in 2009, I caught up with a friend of mine who was one of the proprietary traders at Goldman. And this is when Goldman were really in their heyday of prop trading. And I said to him, God, I had a hell of a year in 2008. How did you go? Expecting a similar story. And he said, no, I had my most profitable year trading the markets ever. And I was riveted. And what was started as a beer after work turned into a long dinner, and I was scribbling notes. And this is when I had a major light bulb moment that, technical analysis, that's what I need to pay attention to. He said to me, we don't worry about what those blokes are saying. We follow price. You don't buy things that are in a downtrend. You short them, you buy puts on them. You only buy things that are in an uptrend. It's much easier. And so from that point on, I became very devoted to learning anything and everything I could about trend following and technical analysis. And fortunately, I had access to a Bloomberg screen, and I could spend hours testing systems, back testing, and watching markets in real time. And that was really when I laid the foundation for the methods that I use today.
So tell me about the change from going from investing more like long-term to not necessarily day trading, but more like being active in the market every day, like taking trades, more day trading, swing trading. Was it an easy change for you to kind of go through that? Or was it something when you had to adapt and change a lot there?
Well, no, I mean, I found it exhilarating, and I found it a natural fit. the thing is, when you're a fundamental investor, you might think you've done the work, but really you haven't. And unless you're going through the financial statements and the announcements yourself, what most people do is they rely on an analyst to have done the work for them, whether it's an analyst at a bank or a broker or, Motley Fool or wherever you're getting the research. Most fundamental investors are hoping or relying on somebody else to do the work for them. The other thing that they're hoping for is that the market goes up every day. All right, because if you're a buy and hold investor, markets like we had in 2022 can be not a lot of fun. Whereas when you're a trader and you can take long and short positions, markets like 2022 can be a lot of fun. And so I found the switch A, exhilarating, and B, I found it just enabled me to be master of my own destiny and really live and die by my own efforts rather than the efforts of somebody else.
Interesting. So what would you say is like your sweet spot these days? What do you kind of focus on when you trade?
I'm a trend follower at heart. So my preferred way of trading is to look for strong tradable trends and then identify high probability moments of time to join that trend. Now, in the current market environment, we're not seeing a lot of long-term trends. The markets are choppy and we're not seeing a lot of follow through. So I do employ counter trend trading as well. And counter trend trading, which is where you're literally trying to trade high probability turning points in the market, you're looking at identifying tops and bottoms rather than segments within a trend. But it can be really, really effective and a really useful tool to have in your arsenal when markets are choppy like this.
Interesting. So what does that look like? Do you have any kind of preferred instrument to trade, any kind of preferred time frame, and kind of what's the routine like trading on trends like this? Because you're not going to have necessarily trends every day and make big moves. So how do you look at that?
In terms of preferred instruments, look, I focus on trading options on US stocks. That's really the asset class I specialize in. I trade futures every now and then. My first job out of uni was as a futures broker, so I've got a bit of background in that. But 99% of my trades are options on US stocks. The US stock market and the US options market is by far the most liquid market with the greatest opportunity set. I don't find I need to trade anything else. And really my process is to see what the markets are doing each day, look for trends in the major markets, the major indices, the sectors. I look at the main peripheral markets such as the dollar, bonds, gold, oil, credit markets, those sorts of things. And all of that will inform me as to, whether I want to take larger positions or smaller positions. So I am a trend follower at heart, and I'm a technical trader. So I trade technical setups, but I do look at the macro situation. And if the macro situation and the technical setups are all kind of pointing in the same direction, that's an environment where I will take slightly more risk. I might have a few more positions on. I might take slightly bigger positions. Where I'm seeing a lot of cross currents, which is frankly what I'm seeing at the moment, where macro indicators are not necessarily lining up with what I'm seeing technically, where there's some contradiction, that's when I'll take smaller positions and take less risk. That there are times to take risk and there are times to manage risk. And right now, I think the emphasis is on risk management.
Do you feel like having a job in a bank like Goldman Sachs help you to become a better trader? Because some people might want to go that path where they first get a job in the bank, but they really want to, like the goal is to be able to become traders and be independent. Do you feel like that's something that help you in the way? Or is it like different, or is it kind of hurting you as a trader?
It's something that can help you if you've got the ambition to begin with. Like if you've got a job in a big bank, but you don't have that burning desire to become a trader, you're going to miss a lot of the lessons that are presented to you. You'll find in markets a lot of the lessons that you will learn are not obvious. You've really got to be in tune with what the market's trying to teach you, and really, I guess, have that desire, eyes wide open as to what the market's trying to teach you. Otherwise, it can just be just another win or just another loss. So yeah, it can be helpful. Certainly being immersed in that environment where you're involved in markets every day, you're talking to people about markets every day, you'll learn a lot. But it's definitely not necessary. And I think it's only helpful, like I said, if you've got that ambition and that desire to begin with.
So when you say learning from the market and having these learning experiences, what are some things that you've learned over the past few years that you think is kind of necessary for a new trader to learn?
The big one is this desire to be right. Most people would rather drink bleach than admit they're wrong. And this is the undoing of many, many traders. If you want to be right all of the time, you'll buy a stock or an option, you buy a financial instrument and it moves against you, and you'll have a sense of denial or a sense of indignation of I'm right and the market's wrong. And if I just hang on to this position long enough, I'll be proven right in the end. The fact is, if the market's moved against you, you're wrong. And as a trader, your job is to, at all costs, stop a small loss from becoming a big loss or an account destroying loss. If you can learn the art of not losing money whilst following a process that gives you a probabilistic edge, your success is almost inevitable. All right. It takes time. People think trading is get rich quick. It isn't. It requires time and effort. Learning to trade, it's much like learning to swim or learning to play golf. It doesn't happen overnight. But with consistent effort, the rewards are there. But one of the most important things, like I said, it's admitting when you're wrong early and doing something about it quickly and stopping that small loss from becoming a big loss. And like I said, if you can perfect the art of learning how to not lose money, success is almost inevitable. If you stick to a process, it gives you an edge.
A lot of people believe that these banks, traders, they have like different strategies. They have like fancy ways of doing things or like secrets that the common trader doesn't know. Do you feel like that's accurate? Or do you feel like that's the bank traders just use the same things that other people use, but maybe like in a different way, a different format?
I mean, yeah, they will. I mean, bank traders have got access to different information, right? In terms of they can see the flows, they can see what's going on in the market. They've just got better, quicker, faster access to information. But that's only one way of trading. When it comes to technical analysis, anybody who's prepared to put in the time and effort in learning how to trade a certain method can do really, really well. I trade daily charts. 95% of my trades are done off the daily time frame. Like I said, I'm not a day trader. I make all of my trading decisions when the markets are closed. And if you're trading daily charts and you're trading options in stocks that are liquid enough for a retail trader, but probably not liquid enough for a big institution, and you're holding positions for, like me, 2 to 3 days to 2 to 3 weeks, this is a really good playground, all right? Because the position size, the nature of what we're doing, the holding period, it's just not something that's dominated by the institutions. You think about institutions, that they tend to be skewed to either high frequency trading, which is trading thousands of times a second. Forget about that unless you've got a supercomputer co-located in an exchange. Or they tend to be much longer term. You think about CTAs and managed futures managers, where they are employing algorithms and trend following strategies, but they have to trade the most liquid markets in the world because of the size of the funds. And they're typically holding positions for months, if not years. So the way I trade, it's just not something that is particularly attractive to institutions, and therefore it's not particularly competitive.
What would you tell a new trader who wants to start in the market these days? Or let's say someone with not that much experience who wants to be able to work and make trading work for them? What should they focus on? Because like there's so many ways to go about things these days, so many strategies you can probably find on YouTube or online. What should they focus to kind of get things right and start to get some momentum in trading?
Yeah, it's a really good question. You'll probably read the statistics about how, is it 80% of traders lose money? And you look at brokerage accounts and, most people have blown up or 80% of people have blown up their account within 6 months. I forget the exact statistics, but they're pretty dreadful. And I think the reason is it's because the bar to opening a trading account is very, very low. All you need is some form of ID, and you need to be 18 years old and away you go. So nobody makes you learn how to trade. Nobody makes you pass a test or get a license to trade. So it's a very low barrier to entry. Now, imagine if people started driving cars without learning how to drive a car. They didn't have to get a test or get a license, all right? There'd be a lot of car accidents. Now, that's what's happening in trading every day. There's a lot of trading accidents because people don't have an education. So I think even though people think They know what they're doing, or they think they can just buy whatever Jim Cramer recommended last night. It's not how it works. So get an education. The other thing that's tricky about trading is, if you want to learn how to fly an airplane, all right, something that seems very difficult, but people do it. People become pilots. You put in the work and you learn, and what seemed impossible becomes almost second nature. But if you want to learn how to fly a plane, there's one source of truth. If you want to learn how to fly a Boeing 787, well, there's a Boeing 787 flight manual, and that's where you learn. If you want to learn how to trade, well, there are thousands of different ways you can learn, whether it's free YouTube ads, whether it's some free ebook that you download. I would just say, be very cautious about who you're learning from. Study their pedigree, study where they've come from. Are they honestly, seriously qualified to teach you how to trade? What's their experience? Where have they learned? What have been their successes and failures? So I think an education is important, but just as important as that is a quality education. So really pay some mind to where you're getting the education from.
I think something you learn from having a background in institution is the expectations traders have that are retail are way different from what the banks aim for. Can you kind of expand on that and how that, like, what kind of returns would a bank trader expect and what kind of returns would someone else expect, and how does that work out?
This is a really, really subjective topic, and different people have got vastly different thoughts. I mean, one of the great Wall Street myths is you can't possibly expect to earn more than 10% per annum without taking excessive amounts of risk. And this is just, I mean, it's nonsense. And it's a myth that's been concocted by Wall Street, because that's the sort of return that they can generate for you over a market cycle, because it is approximately the annual return of the S&P 500. So they want you to be convinced that that's a good return, so that you're happy to pay them a bunch of fees in return for them generating that return for you. But they want you to believe that there's no point trying to beat that return yourself, because you'd only do it by taking on too much risk. All right. And a lot of people have fallen for this. But then you get the other people who say, well, I just want to turn my $2,000 into $1 million in 6 months. And that is equally nonsensical. If I'm talking about return, I don't like talking about returns to people who aren't immersed in options trading, because they just don't understand, what's possible and what's probable. But 5% per month is a target return that many of our members are hitting. And I think that is a stretch but realistic target for most people once they've grooved their process. I always say to people, your first 100 trades are your apprenticeship. You're going to make some mistakes. There's going to be some losing trades. You do some dumb things. By the time you've done that, you should understand your broker's platform inside out. You should understand your trading method, and you've had some real experience with some of the emotional ups and downs of trading, some of the wins and some of the losses. When you come out of that, you are now what I would call, you're no longer a student trader, you're now a beginning trader. And now it's time to start growing your equity curve, growing your account.
Interesting. Now, you mentioned your first 100 trades, which I know people who wouldn't take 100 trades, they would just switch strategies or switch style or change something before that, which is also a big mistake. Tell me about kind of how do you get people to stick to one thing? Because they might see it work, they might see it not work for a while, then they want to give up, they want to go to something else. So how do you make them stick to that one thing? Is there a solution to this or no?
Well, I mean, people, I think, maybe everybody has to go through their own journey. There are some people, you can tell them, don't touch the stove, it's hot, you'll burn your hands, and they won't touch the stove. There are other people, they just have to put their hands on the hot stove and get burned. So some people only learn that way. But what I would say is that the holy grail in trading, it doesn't exist. All right? People always want a system that will give them every single winning trade with no losing trades. Doesn't exist. The other thing to remember is that with trading, we are always dealing with probabilities, never certainties. Right? There's a reason this job is called trading and not guaranteed profits. So when you get a trading setup that gives you a probabilistic edge, what that means is the probability of outcome A happening is more likely than other outcomes, but anything is still possible. And even with a system that's got a high win rate, you can absolutely have 3, 4, 5, 6 losers in a row. And this is where risk management is absolutely paramount. Because if you're managing your risk and you're stopping those small trades, small losses from becoming big losses, they're just paper cuts. You just take a few paper cuts along the way, and then you might have one or two winning trades that puts your account right back where it was. And look, you may not have 6 in a row type losing streaks. It is possible in a difficult market environment, but it's not going to happen every day. And you can certainly have winning streaks of more than that. So it all kind of washes out. What I would say to people is never assess your trading performance on the outcome of a single trade. I would encourage people to look at blocks of, say, 25 trades and make an assessment every 25 trades. What's my win rate like? What's my risk reward like? How much bigger are my winners than my losers? Or, heaven forbid, are my losers bigger than my winners? In which case I really need to tighten up on my risk management.
I'd be curious to hear about the mindset part of trading. A lot of people want to focus more on the mindset to be successful. And is it the same thing in banks? People kind of try to focus on the mindset a lot, like having the right mindset to trade, or is it just not that encouraged to kind of focus on the mindset when you trade for a big bank or institution?
Yeah. Mindset is what separates long-term successful traders from aspiring wannabes. Anybody can have a profitable year or a profitable 2 or 3 years, but without the right mindset, generally a trader is going to blow up or have a shocking year at some point. So having a successful mindset really is the final frontier in trading. That is your ultimate objective. And the sorts of things that contribute to that are, again, not losing money. I think one of the most important tips I give people is don't even think of yourself as a trader. Think of yourself as a risk manager. So in all of your self-talk, in all of your process, you're not a trader, you're a risk manager. And that way you're going to set a really high bar on the trades that you take because you're approving them not as a trader, but as a risk manager. And if you adopt that sort of a mindset of, not thinking about how much money I'm going to make on this next trade, but how much money I could lose, that sort of mindset will catapult your success. I love Paul Tudor Jones's quote. He says, "Every morning I wake up and assume all of my positions are wrong until the market proves otherwise." And I think that's a really powerful and humble mindset to have. And just being humble. Another thing that I have is a no high fives rule. As soon as I feel like high fiving myself on what an awesome, clever trader I am, I go to cash. All right, because I just know that when that happens, I'm just 1 or 2 trades away from a really nasty lesson. As soon as you start to think as though you've got the trading game sussed, and you're God's gift to trading, that is usually when the market's about to kick you in the butt.
Definitely a good lesson there. So you will go to cash for a couple of days or only for
24 hours, at least 24 hours.
Okay.
The other thing I do, I've got another go to cash rule. If ever I experience a portfolio drawdown of 15% from a high watermark, I go to cash. All right. If I have a portfolio drawdown of 15%, it means I'm out of sync with the market. Something is not quite firing. I'm out of sync. I just need to go to cash for a couple of days, let the kind of emotional baggage drain from my system, and then reapproach the market without any emotional or positional baggage. I can reapproach the market with a fresh pair of eyes and hopefully get back in sync.
Yeah, there's a lot of power into taking breaks too sometimes and like getting away from the market for a couple of days, like you mentioned, or just kind of not trading too much. Is it something you also do? Or whenever you go to cash for a few days, would you look at the market or would you kind of stay away and not touch the market at all?
It depends on why I've gone to cash. Like if I've gone to cash because I'm going on a family vacation, I mean, I'll watch the markets, but from a distance. If I've gone to cash because I've hit a 15% portfolio stop loss, which touch wood hasn't happened to me since October 2018, I'll still keep watching the market because I'm still kind of looking for clues as to what I might have been missing. I think in general, you've just got to have a process that helps you or helps inform you on how much risk you think you should be taking. I mean, right now, I am 100% cash. I don't have any positions on because we're in a choppy market and we've got an FOMC meeting tomorrow. And FOMC meetings have just got this habit over the past year or so of really rocking the market up or down. So I don't really want to go into these meetings hoping that the market responds one way or the other. I'd much rather just be in cash rather than crossing my fingers hoping things work out my way. And then once things become a bit clearer after the meeting, I'll start reestablishing positions.
So people love to hear the daily routines of the traders who are successful at making trading work for them. So would you mind telling people kind of like what your day-to-day is like, what kind of stuff you do, what are some of your habits, your routines to maintain trading?
Well, other than things like school run and preparing kids' lunch boxes and
Yeah, you can add that to it if you want to. That's
stuff
up to you.
like that. Look, for me, it's I've got a daily checklist that I run through. So I look at all of the major markets. I look at the major commodities, things like the dollar yen, Aussie dollar, Aussie yen. I'll look at things like gold and oil in major commodities markets. I'll look at what bonds are doing, 30-year bonds, 10-year bonds, 2-year notes. I'll look at things like what high yield bonds are doing, what high grade bonds are doing. I'll look at things like the VIX, the put call ratio, and looking at all of these things, the advanced decline line, market breadth. I can build a risk dashboard, if you like, in terms of how convinced am I that the market's going to go up, the market's going to go down, or the market's going to be choppy. And then I compare that with what I'm actually seeing on the charts. And what I'm looking for is alignment. All right. If the macro indicators I'm looking at are all kind of saying, things are looking bullish here, and I'm seeing bullish technical setups, that's when I know I want to start pressing my bets a little bit harder. But if I'm seeing a really mixed macro picture, or even a bearish macro picture against bullish technicals, I will still trade the chart in front of me. All right. I will still look at bullish setups if that's what I'm seeing in the charts, but I'll be taking smaller positions and fewer positions, and I'll be ready to reverse if those macro signals are sending me warning signs. So really, it's about looking for some agreement between the technicals and the macro, and then running my scans, looking for high probability moments in time to put my money at risk, and then working out what's the best option strategy. Do I want to be directional? Do I want to buy premium? Do I want to sell premium? And then working out what do I want to pay or what do I want to receive for an option? And then it's a case of waiting for the market to open and working that order in the live market. And I trade the open because I live in Singapore. US market opens at 9:30 p.m. my time. And really, I kind of just watch the first 10 or 15 minutes, which tends to be a very volatile, emotional market phase. Spreads tend to be a lot wider. Once that's sort of all calmed down, I'll look at putting some working orders in. And I'm trying to get all of that done by 10 p.m. where I'll start getting ready for bed.
Interesting. So roughly, I'm guessing you have more preparation time before, but 30 minutes a day of actual trading time, and then you're pretty much good to go after.
Yeah, I mean, my actual trading time is like actual trading in terms of entering orders and what have you, or exiting orders. It's really only a few minutes a day. The preparation time, look, some days it'll take me an hour, some days it'll take me 2 minutes. But on average, it's probably 20 to 30 minutes a day.
I know people who are in the mindset that they got to trade more to make more money. And it seems like you're doing the opposite of that, which is also kind of what I like to focus on myself.
Mm-hmm.
So how would you tell people that are sort of trading too much now but not getting results? How can they simplify things to a style where they take only like an hour a day for trading, not more than that?
Look, it's something that I have to wrestle with myself. I have a tendency to overtrade. So it's a little battle that I do fight with myself, but I just always remind myself that what I don't own can't hurt me. All right. And again, it's putting that risk manager's hat on. And is this really something that am I prepared to risk this amount of money on this setup? Is this setup really compelling enough? And not focusing on how much money I think I'm going to make, but on how much money I really could lose. And when you put that risk manager's hat on, I think you become a lot more particular and fussy about the setups that you'll take. And really, you want to start seeing all of the boxes on your checklist getting ticked rather than just 2 or 3 of them.
So what can people find if they connect with you or reach out after the interview? We're going to see your work and learn more about what you do.
So they can follow me on Twitter. My Twitter handle is Simon_Ree, REE. They can follow me on LinkedIn as well. My name is Simon Ree, and follow my website as well. If you head to taooftrading.com, that's TAOOFTRADING.com. You can sign up for my newsletter. I've got a YouTube channel as well. But yeah, probably Twitter, LinkedIn, and the website are the best places to find out what I'm up to.
Interesting. I'll be curious to hear how you come up with that name, by the way. It's a pretty cool name.
So in addition to being a trader, I'm also a Jeet Kune Do instructor. So Jeet Kune Do is the martial art that Bruce Lee developed. And Bruce Lee wrote a wonderful book called The Tao of Jeet Kune Do. And so the title of my book is an homage to Bruce Lee and his book.
That's cool stuff. I like that. Awesome.
Thank you.
Simon, I appreciate the advice you gave here to my listeners. I think there was a lot of good stuff in there. And we'd love to do a follow-up with you at any time to kind of discuss more of that stuff. It's good to see the other perspective of how institutions work and kind of what things you've brought from that experience than your own trading right now these days. That's cool to learn also. Look forward to catch up with you in the future.
Sounds great, Etienne. Thanks for having me.